Good morning and welcome to the TPC Clubhouse and the St. Johns County Chamber of Commerce's Economic Development Council and Ponte Vedra Beach Division are co-hosting this morning's financing panel. And we're really, really glad you're here. I'm Karen Everett. I'm the director for the Ponte Vedra Beach Division of the St. Johns County Chamber of Commerce. And I'm delighted to welcome you to our special local, traditional, and specialty lending forum in an outdoors space. Thank you so much to the staff at the TPC Clubhouse for setting up a safe layout for us. We are joined by many participating in today's event virtually. Hi. We are joined today by Dr. Erica Hamer, owner of Ponte Vedra Wellness Center and chairman of the board for the Chamber. Erica, can you wave over there? And we're also joined by Isabel Renault, president and CEO of the Chamber. On your table, you'll find a program and the Chamber's approved public policy agenda for your information. I want to thank our sponsors, and we really need our sponsors to step up this year because we do have some added expenses due to COVID, so we really appreciate their support. Fields Auto Group is an ongoing series sponsor of many of our luncheons, and today is taking the place of a luncheon, so thank you, Fields Auto Group. Regions Bank, and they're represented today by Matt Price, one of our panelists. North Avenue Capital, and they're represented by one of our panelists today, Joseph Rowell. Sight and Sound Productions, thank you very much, and they're represented today by Ken. Where's Ken? Thank you, Ken. Florida Healthcare Plans. Florida Healthcare Plans cannot be with us today, but is proud to be a sponsor to equip business owners in our local community with the information and tools they need to develop and maintain a thriving business. And last but not least, we appreciate our sponsorship by Precision Payment Systems, and they're represented today by Allison. Where's Allison? Now I am pleased to turn the podium over to our moderator, Mr. Ed Dwyer. Ed is chair of the Chamber's Small Business Council and a consultant with the Small Business Development Center. Ed?
All right. Thank you, Karen. Appreciate it. Wow, isn't this fantastic? Hi, everybody out there in Zoom world. You can tell that I'm a retired banker and the only guy without the blue blazer on around here, or whatever blazer. So thank you, Karen. Thank you, Kathy, for setting this whole thing up, and what a wonderful place to be able to do this on a beautiful morning. So this whole gathering kind of came out of a genesis of a conversation that Marius and I were having with Kathy several months ago, just talking about all the different financing options that exist out in the community. And Marius will tell his story in a little bit. And through about halfway through that conversation, Kathy says, I think we have a platform for a panel for our EDC for economic development. So that brought us here today. So it's wonderful you're all here. And we really hope that we would have an audience of people from a lot of different perspectives, from the CPA realm to perhaps some attorneys that are in contact with a lot of other businesses in town that you can spread the word. Because this is really critical to economic development, that here in St. Johns County, we have the whole realm of capital access through different types of lending programs that most people are not aware of. And so hopefully this is an education session that you will take and broadcast to your clients in your space. And perhaps maybe you yourself will want to talk to one of the gentlemen after this session. Quickly, it was mentioned that I'm with the Small Business Development Center, but that is a very brand new thing, like 3 months. But for 30 years, I was a banker myself, 27 of which with US Bank. Based in Cincinnati, Ohio. And so I was a commercial banker, and I ran markets throughout Ohio and Indiana. And then I was the chief risk officer for the entire consumer bank for a number of years, and decided there's something else to do in life besides banking. So I started a consulting business, which COVID completely crashed and burned. I was supposed to be all over the country in 2020. I live in St. Augustine, and in setting up a program for the Chamber, I ended up working for the SBDC as a consultant, which is kind of wonderful. I can help businesses here in Northeast Florida through UNF, which is where the SBDC is based. And so a quick commercial on that is what I'm working with organizations to help them understand what is the proper way to fund their company. Is it with capital? Is it with loans? If it is loans, then what kind of loans? And so I help them think that through and figure out what are the right places to send them. So I will be sending my clients to any one of the 3 gentlemen here on the panel and others, because that's what I do now. And so it's a lot of fun. It's really great helping out organizations in the community. So with that being said, I'm going to have each of the gentlemen introduce themselves so they can kind of tell their story, and then also talk about what their primary area is within the financing realm. What's their specialty? What's their wheelhouse? What do they know really well? And we'll dig deeper into each of them as that goes on. But what you'll start to hopefully see is the picture of how it all fits together. They're not necessarily competitors of one another. You might think that they would be, but there could be a real issue of one says, that's getting outside of my realm. I can't do that, but I think I could go to Marius and he could do that. Or I've got something that's perfect for Joseph. So it's going to be, hopefully we'll see how this all weaves together. And so we'll start with Matt Price with Regions Bank, a kind of a classic commercial banker, one that I have been for many years of my life. And so we'll start with Matt, and then we'll go to Marius and then Joseph. And with that, I'm going to take a seat and kind of be part of the panel, but wanted to welcome you all. And also, please raise your hand, questions throughout, right? We'd like to, if you want somebody to clarify a point that they made, we like this to be very interactive. So let us know and we'll shout it out so that the people on Zoom can hear. Fair enough? Well, good. Matt, over to you.
Thank you, Ed. Ed, you said something funny. There's something to do in life besides banking.
You'll find out.
Good morning, everyone. I'm Matt Price with Regions Bank. I'm in commercial banking. I manage about 70 commercial relationships, all in the Jacksonville area. And I also serve as chair for the board of the Ponte Vedra division of the Chamber. So it's great to have everybody at an in-person event. And certainly appreciate you coming out today. And if this gets too dry with the finance panel, Peter will bring Bloody Marys out to everyone. Been in banking my whole career. Started off, I say the hard way. I started out working in a branch in Albany, Georgia, which is where I'm from. Worked my way up through the retail side of the bank and did that for 10 years and have been with Regions Bank since 2006. Started when we were AmSouth, started as a branch manager there and got the opportunity to go into the business banking commercial side in 2012. And here I am 19 years later. What I do is I work with locally owned businesses, sales size mostly 5 to 50 million. I would say true operating companies. My businesses are typically generational. They make something, they employ people, they operate out of brick and mortar. They are financially active. Things I help my business owners with are, if they want to buy a building, if they want to purchase heavy duty equipment, if they need working capital, we can provide a line of credit. Tomorrow we're closing on a loan where an e-commerce company has expanded because of the pandemic, because people ordering things online, and they were leasing warehouse space, and we can provide them fixed rate financing to go buy a warehouse and purchase commercial real estate for the first time. So those stories are impactful. It's not just a loan. There's a story behind each and every loan, and certainly look forward to getting into the program and answering any of your questions. Thank you.
Morning, everyone. My name is Marius Dobrin. I'm the co-founder and president of Sawgrass Finance. I was born in Romania, came to the States when I was a teenager. I lived on the first part of my journey in this country on the northern snowy states until I found that there's a better way. In 2012, I relocated myself along with my family to Jacksonville to not only follow the sun, but follow my wife's career. For those married out there, happy wife, happy life. Upon moving here, we were serving the asset-based lending community through a private firm called TD Advisory Group. I got into the ABL space. When people say they got into something and then they started in the mailroom, I started below the mailroom because 5-6 months later, the company that I worked for, I had no idea what they were doing because they were liquidating some stock, and I was working on that particular. I thought they were in a diamond business until I figured out what the hell they were doing. I started with a small private lending asset-based firm in New York City. There, I worked my way up as I learned the trade. I was fortunate enough to meet the right people at the right time. There, I befriended the chief credit officer for the company, who became not only my best friend, but a mentor. who is now my partner in Sawgrass Finance. Upon his relocation to Florida in 2016, we started TD Advisory Group that I mentioned, and we were providing field examinations and credit risk analysis to the asset-based lenders of the world and factoring companies in the country. While doing that, I got to meet some of you that are here, and we realized asset-based lending is very little known in this town. It's a market that's very underserved, and people do not generally know what ABL is and how it works. And with that in mind, and the fact that we had the pedigree and the track record of starting similar businesses from scratch with from my partner's side, we along with knowing the impact we can make on these smaller businesses, typically the ones that are always underserved, we incorporated Sawgrass Finance in 2019, and we're proud to call St. Johns County our home. We're, myself included, I couldn't find a better place to raise my kids, but also for future business opportunity. I believe that Jacksonville is a gem that now more and more people are finding out about it. Our mission at Sawgrass Finance is to just help the small and medium-sized businesses secure their working capital by help them use their assets to work for them. And I'm looking forward to talk a little bit more of how this works as the day goes by. Thank you.
Well, hey, I'm Joseph Rowell, and as Ed mentioned, I work with North Avenue Capital. A little bit about the firm. We started about a little over 5 years ago, 6 now. And the genesis of our launch was recognizing we primarily came from an investment background, myself, my partners, and identified a gap in the capital markets, particularly with regard to senior debt, where you had a lot of small businesses, medium-sized businesses that were struggling to find affordable capital, having to lean on private equity and other forms of capital that can be pretty expensive. And we had an opportunity to leverage a far too little known program that's actually run through the United States Department of Agriculture. They have a guaranteed lending program that's similar to the SBA lending, which a lot of us are familiar with. And so we underwrite commercial loans to rural businesses only. That's what North Avenue Capital does. We do it across the country. In our first 5 years, we were very blessed to achieve the #1, ranking of the largest lender in this program across the country, which is a big accomplishment for us and our team, many of which are here this morning. And we have offices. Our primary headquarters is here. Theoretically, we could have put the headquarters anywhere. I don't know why we would have done that. Not here, but thankfully we did put it here, and we're having a great time here in Northeast Florida. But we lend across the country, and typically we're talking about investments between $1 million and $25 million. So and the big question that usually people ask about our business is, what does rural mean, right? Because each of us thinks in our own minds, kind of has a prism for what we think rural means. And I'll give a great example of how close rural can be. 97% of the country is rural. And so basically the way that we define it is it's all population based. So if you've got 50,000, a population of 50,000 or fewer, then you are determined to be rural. So there'll be a little bit of shifting around with those kind of boundary lines, if you will, once the census works its way through the system after the 2020 data collection. And we'll see where the lines are drawn. But for right now, I can tell you, and I'll stop talking about us and start talking about my good friend Gus over here. Mr. Collado started an incredible company over 10 years ago, called Planet Swim, based here in Northeast Florida, and had a vision to build his own aquatics facility. And we were really, really fortunate to help him do that. And he's situated right there by Davis Park and Ponte Vedra High School on Davis Park Road, just a stone's throw from here. So that, as of today, is considered rural America, which most people would scratch their heads at. Nocatee is mostly in rural America. Probably 85% of St. Johns County is deemed rural today. So we do loans that range from hospitality, hotels, ground up, refinance, manufacturing. Matt mentioned acquiring warehouse space for logistics and e-commerce. We've done deals like that in South Georgia, and a variety of other projects. There's a very few industries that the USDA will not help support by issuing these loan guarantees, which is what allows us to go with affordable rates. He mentioned a fixed rate loan that might be available for somebody buying a warehouse. We would typically, usually our client is somebody who is just outside of that sweet spot for a traditional bank in that fixed rate debt. If somebody can get fixed rate debts, we want to bless them all day long and say, go get it, right? If they're a little bit outside that the boundary of a bank's comfort zone, then that's typically where we'll step in and fill that gap. Usually 20 to 25 year amortizations, 5.5%, 6% rates that are generally variable. So a little bit of a different pricing structure than a traditional bank, but really at the end of the day, what we do is we're trying to create jobs in rural America. That's what the agency's plan is. That's what we're drafting into. And so when you look at Gus and what he's building with Planet Swim, and I encourage all of you to take a look at it, meet him today. He's here. It's an awesome story of his American dream coming to fruition. And that's really what we're trying to do. We decided years ago to step away from Wall Street and into Main Street and try to help, family owned companies, smaller, medium-sized businesses, get affordable capital so that they can grow, expand, or in some cases start up. We're having a great time doing it. Very, very fortunate and grateful to be here today.
Beautiful. All right. Well, hopefully that's helpful for everybody to kind of see how this all fits together. And so one thing that I hear a lot in the community just here in Northeast Florida is that people have this sense that maybe perhaps because of COVID and all of what we've been through, that banks are not lending or some variation thereof. It's like the banks don't want to lend. We got flyovers for our event today.
Yeah.
You see that? Somebody's proposed to somebody up there.
Wow.
Hopefully not somebody here. Or maybe
Oh,
it is.
yeah.
Michael, you getting married?
So precious. Sweet.
But I will tell you that each of these three gentlemen in their organizations and around the country are starving to lend money. Right now, FDIC data will tell you that this is the lowest loan to deposit ratio in the history of banking right now. Because of COVID, because of the stimulus bills and whatnot, the country is awash in cash. Banks don't really want any more deposits. Some banks have actually said, we're going to charge you to put a large deposit with us because we don't want it. We can't do anything with it. And so with that being said, I think even the underwriting, I will say that banks will always stay true to their policy, right? They will never change in terms of their credit box and so forth. But I will tell you, the SBA has absolutely loosened their structure these days. I joined a call yesterday with the SBA for the typical 7A and 504 and other microloans. And they're the provider of the Paycheck Protection Program, the disaster loan, EIDL program. They're doing everything they can to awash small business around the country with money. Sometimes I think it's a little over the top. There's even a brand new shuttered venue operators grant for any and all music venues that were clearly hit hard by COVID. They're just going to give them money, not a loan, it's a grant, based upon the revenue reduction from 19 to 20. They opened up the portal last Wednesday, I think it was the 8th, and it crashed. And they haven't been able to open it up yet. There's a second one coming called the Restaurant Revitalization Fund.
Yep.
Same thing. The thing with the restaurants, though, is they've all gotten PPP loans. And so when you apply for this grant, they'll subtract the PPP from it. And for some, that won't leave anything left. But all of what I'm saying is that the SBA has waived their fees for deals for the typical 7A and 504. And so we helped an individual buy an existing business in St. Augustine recently through the SBA and save $70,000 in fees because they waived them. So it is a borrower's market right now, believe it or not. So I just want to make that known, share that with your clients. And so I'll start with Matt then to talk about what are the underwriting criteria that Matt would have, and maybe that will flow through to each of you to talk about how would you qualify a credit? What are you expecting from a potential borrower? That'll help all of you think about how you might think of where to go with your clients with that. So Matt?
Thanks, Ed. So I'll just speak on behalf of traditional banking, but essentially traditional banking, we're cash flow lenders. We're not collateral based lenders. We're cash flow based lenders. So think of, okay, when you drive a car, you're driving and you're looking through what? The windshield. Traditional banking and underwriting is done through the rearview mirror. So we need a business to have been established at least 2 or 3 years before we could take a look at it for the most part, because we have found that past performance is the best indicator of future performance. So underwriting done in the rearview mirror, pretty standard loan package that we're going to ask for all owners is 2-3 years of business tax returns, 2-3 years of personal tax returns, a completed debt schedule, and a completed personal financial statement. And what we're looking for is enough positive net income and positive cash flow to service the debt. So for the most part, in my world, give or take a few rare instances, if you can't prove it on paper, it does not exist. So, need you to have been in business at least 2 or 3 years. We're going to ask for that standard financial package. We're going to underwrite it based on cash flow. And, if it's a good idea, you have the cash flow to service the debt, we're going to make the loan. Now, if you come and say that, Matt, I have a great idea for a loan and we want to buy a building, and on one half of it, we're going to open up a video store, and on the other half of it, we're going to sell beepers. Probably not the best idea, and don't think we're going to look at that one. But, that's traditional banking underwriting in a nutshell. If you want to have a one-off, certainly ask me when we open it up for Q&A, or I've got business cards on the table. Certainly reach out. Be happy to get in the weeds and answer any questions.
And Matt, if I could just stay with you on one more point, talk about how in banking, banks are all about segmenting in terms of segmenting deal size and what bank personnel handle what deal size. So speak to that, if you would, from branch level on up.
Sure. I think our branches, at least at Regions Bank, are very capable of handling any loan size under 500,000. That's where I kind of start, because my sales size for companies I work with is typically 5 to 50 million. And so the deal sizes that I work on are 500,000 or up. You can even get into a case where if you have a relationship with your existing bank, I would say for credit exposure under 250,000, a lot of banks will underwrite and they'll what's called score that, to where they have an algorithm based on your deposits on hand, your personal credit history, and a few other metrics. So they may not get into, asking for a full financial package if you've got limited credit exposure. But again, branches can take care of anything for the most part under 500,000. I pick it up from 5 million to, I haven't run into a cap yet, but we have a corporate segment of the bank too that banks publicly traded companies. So we can throw a line out and try to pull any fish into the boat, with a bank of our size.
Perfect. Marius?
Well, I always tell every business owner, every entrepreneur out there, that every business goal should be to be bankable. That's when you keep the most savings. That's when you can really take at a very high level. And to get there, there are vehicles just like the asset-based lending product out there. Whatever Matt said that they're looking for, we're not looking for. In real estate, there are 3 words that matter: location, location, location. And asset-based lending is collateral, collateral, collateral. Our approach to it is we want to sit down with the business owners. We want to hear their story. How did they get there? What were their downfalls? How did they recover from it? Where did they want to go? How big did they want to get? And that determines if we should look at, okay, let's see what's under the hood. When we get there, we're always focusing on the collateral. The quality of the collateral determines the borrowing power, but also see if there's enough there to take you to the next level. Because if we're just coming in where you're stale, that's not something we typically get involved. The most important part during the process is the due diligence, or the field examination, also known in the industry. It's something we've done directly for, as I mentioned earlier and during my introduction, with TD Advisory Group, where we would do these type of assessments. During the field examination, we're opening up the books pretty much. And if there's a business that's been established more than 2 years, we're only looking at the last two to see how those assets performed. In the case of the accounts receivable, which is the most important and the must-have in order for us to do, excuse me, anything, we're looking to see, KYC, know your customers, all banking saying, and we want to see what's the customer base. We're determining during this process the ineligibles, what's past due, what is foreign, what's sold in consignment. When it comes to inventory, that type of asset, we're looking at what's slow moving, work in progress. We eliminate those ineligibles, and then we get to the net AR, where we're then looking at the dilution, turnover of those assets. That determines the advance rates that they can get against the eligible accounts receivables, the inventory. We're also analyzing the financial statements. Cash flow is not really that important for us. We're in a business to improve that cash flow. It's not the determinant factor. But what we're paying closely attention on the financial statements is how much skin in the game does the owners have? Because if they're behind that, then we're willing to listen more and get involved. And if they have a good plan to execute on, even if they're less than 2 years, which is the ideal for us to look at, startups, 6 months in, or a little more than that, we're always looking for the 4 Ps. Everybody has acronyms now. So the 3 PPP loans, we added another one, so we made it 4, which is if there's the good product, good personnel, they've been there, done that, good processes, and a plan to grow, which is very important, then we're really, really willing to get involved. And for us, during the TD advisory times, we realized that everybody in the ABL world wants to be at the $5-10 million loan size. Well, the lower side of things, from $1 million to $3 million, that population was very underserved, and that's what we're focusing at Sawgrass. We want to go to help the little guys, to help the ones that are, the most ignored, to put it simply. And for that reason, our sweet spot is anywhere from $500,000 to $1.5 million. That's where we feel like we can make the biggest impact. Once we insert the liquidity in there, they can then go and get the raw material, produce the finished goods, which increases their sales, increases their profits, which in return will grow the business. So that's kind of what we're looking at things, from the credit perspective, for any businesses out there.
Well, I cannot tell you how unusual it is what he just said, because most banks that have some form of an ABL shop, structured finance, they will say, don't even send it to me unless it's 10 million or more, because there's a lot of calories get burned to do an ABL deal. You have to do audits up front. You got to really get into the weeds and understand their AR, their inventory, and so on and so forth. So what Marius is offering is highly unusual. And that's because he's got access to capital that's different than banks, right? Banks are using depository money, whereas he has a funding source that allows for some variability. And so to be able to help a leveraged company here in Northeast Florida that otherwise would not be able to go to an ABL shop, they can go to Sawgrass Finance. That is really unusual, and it's an interesting niche, and one that I'm sure Marius will have great success in filling, but he needs people to refer people his way. So that's, and I could see, I want to delve into this a little bit more in a bit, but you can see where Matt might say, I can't get that deal done, so I'll toss it over the wall to Marius, because Regions doesn't want it. They don't want a 500,000 ABL deal, but they might be interested in. And so we'll get into that a little bit further. So that was a really good distinction I wanted to hit on for Marius. Joseph.
Yeah. And it's funny, North Avenue Capital almost sits right in the middle of all that. Right. So we like to see cash flow too, but we can do startups. So we can do pro forma projection based business loans. Like Marius is saying, we're going to dig into to make sure we feel good about the owners and the operators of the business, that they've got a good plan, good track record, that their experience lends itself to executing on that plan. But what North Avenue Capital is looking for collateral as well, but it's a little different than Marius, right? So you hear Matt say cash flow, Marius say assets like receivables, like inventory. We're really lending against the more fixed assets, so real estate, machinery and equipment, and things of that nature. For a USDA loan, which again we would execute on, you would have to have a full 1-to-1 coverage of for every dollar we're lending, there's got to be $1 of discounted collateral to be pledged. So there's always going to be a blend of equity. Anywhere from 10 to 20% equity has to be available. That can come in the form of cash. It can come in the form of assets like real estate that's already been owned and sort of on the balance sheet of the business. But we're going to lend into a collateralized situation. But again, different. So we actually will intentionally leave receivables, inventory unencumbered so that we can launch that ball over the wall to Marius, and if they need some more cash flow help, that him and his colleagues can help meet that need. Whereas our goal is to come in and really restructure the entire financial structure of that business. We might be consolidating equipment loans and vehicle loans, real estate loans, consolidating into one note, fully amortized over a long period of time. And really the goal for us is to simplify the overall financial situation that borrower has. They've got one lender, one note, one check to stroke on a monthly basis. So we're from an underwriting perspective. Again, I mentioned earlier, we're generally stroking checks in the 2 to 25 million range. That's how much we're lending. Really hard to do something smaller than that. Our average loan size is about 5.5 million. And some of the criteria that's critical for us, again, knowing and understanding the owners is so important. And I'll kick back to Gus again as a guy whose story is rich, and this is just a guy who's never going to give up, and you can strap your wagon to that horse all day long and feel good about it, right? Because he's going to go execute. And so that's part of our due diligence, is really learning and understanding the people that sit behind the business. Of course, competitive landscape, those sort of things as well. The loans that we do are considered, recourse. That's kind of a term that you'd hear, a formal term. That basically means the owners of the business do have to personally guarantee the loan. So because the U.S. taxpayer is basically standing behind in the event of the worst case scenario, the requirement is that the owners of the business do the same. They put their skin in it all the way and say, we're gonna fight for this thing all the way. And thankfully, we've never had to really see what that looks like on the downside. But so we're gonna look at their historicals if they exist. We're gonna look at their pro formas for sure. Look at their projections, and ultimately the situation of the loan is going to dictate some of the underwriting criteria. One of the challenges we face is every deal in rural America looks different, right? We've had generational transfer from Gen 3 to Gen 4. We've had, startups out of the ground, first time somebody's shifting from a career working for somebody else to trying to go out and start their own thing. So every deal is going to look a little bit different. And again, the niche we're trying to fit is if guys like Matt say, yeah, we just, some of the segments that you see within the banks also, they might hit a certain threshold of how many hotels they can do in one particular geography. They might love the project all day, but they can't get it done because of their own credit kind of parameters. And what we would say to local banks is, we're never gonna fight for the deposit. So if you have a borrower that's looking to expand their business and for a legal lending limit or a geographic issue or some other internal reason you can't get there, send them our way, because we'll make sure they stay with you on the traditional banking front, and we'll come alongside you and support the growth of your client through a commercial loan that you guys otherwise couldn't. Because the alternative is that client goes out and tries to find another bank, and then the existing bank kind of loses everything, right? We want to help fill that gap and keep those relationships. I know we're going to talk about that a little bit later.
About how the guarantee works, if you would.
Yeah. So basically, when we're closing a loan, North Avenue Capital, it's our capital. We stroke the check. The U.S. Department of Agriculture, they've got a little team called Rural Development. Most of us think of USDA, farming, agriculture, right? Playing in the dirt. This is a piece kind of outside of that more farm-centric element of what the agency does. Rural development is focused on creating jobs and generating economic development in rural communities, basically trying to support the businesses outside of big cities. And they do this through grant programs, so not the emergency stuff as much, but there's some broadband grant programs trying to get high-speed internet. It's crazy to think about some of these communities, these schools, these kids are going to school and they're on dial-up internet. That's happening right now in this country, and it's like blows your mind because we're so used to our full 1G speed or whatever, right? So there's programs like that. We don't touch that per se, but the business programs come alongside that. There's some renewable energy programs as well. But basically what the government says is, hey, listen, if you, North Avenue Capital, and traditional banks can do these loans as well, if you will go invest that $5 million in the project, we will commit, so long as we meet these certain criterias, to help in the event that something goes wrong. So they serve as a backstop. It's almost like an insurance policy. So we have to believe in the deal. We don't want loans going bad. We lose, but the USDA would put a guarantee in the mix to make sure that our downside losses are limited or are capped. And that certainly allows us to get a little bit more aggressive and take on a little bit more risk than we might otherwise. And that, again, it's very similar to SBA lending in that regard.
So you think about, here we are on Economic Development Council for the Chamber of Commerce. And I was recalling a chamber event not long ago where Commissioner Henry Dean here in St. Johns County talked about that when he became commissioner 4 years ago, that the taxes in St. Johns County were 90% derived from residential and 10% commercial, which kind of blew me away. It was a bedroom community, but wow.
Yeah.
And that's already moved to about 80-20. And the goal is for that to continue to level off in some degree with the right mix. So you think about west of 95, how quickly it gets rural, and what an amazing opportunity when you now know what Joseph has to offer, what he's looking for. That is a prime opportunity to develop what might be, lack of use rural property, depending upon what's going on in the ag market. And I think that's in Hastings, there's a UF facility that helps farmers figure out how to use their properties best, but there's always some that you can't, right? And so I think about the whole combination of what you're seeing here is the ability to really drive economic development here in St. Johns County, because there's ways to get it done that maybe people didn't realize. So let's take a pause there and see for questions here or on Zoom. Somebody's got something. Yes. Mm-hmm. Thank you. That's a great question. I'm going to reiterate it. So being an accountant and someone who's helping businesses and so forth, she's saying 2020 and 2021, perhaps, although it's coming back, businesses and individuals are going to have had some pretty negative financial impact. Their financial statements, their cash flow is likely compromised for most businesses. And so how do we move forward in dealing with that with our clients? So maybe Matt, let's go to you on that one, because you're on the front lines of that for sure.
Thank you. Linda, right? Yeah, thanks for the question. Before I answer it though, I kind of, as we were talking, I wanted to frame up where we are today as opposed to a year ago. So it's April the 14th. We're at beautiful TPC. We're all here together. Last year, banking looked like April the 14th, 2020. I was locked in the back bedroom, processing PPP loans for 16 hours a day, with a loaf of Ezekiel bread beside my chair, because that's the only thing I had time to eat. So it is great to fast forward a year and have a different perspective.
Here.
To answer your question, I want to give you a very specific Regions client scenario. We renew lines of credit essentially every 2 years, sometimes annually, depending on the size of the line. And we had a client that was severely impacted on the Chinese tariffs, and they didn't have an opportunity in their industry to quickly adjust their pricing in relation to the tariffs. And they went from making, $2 million a year to showing $1 million loss. So what we do in that case is we say, is that a blip in the radar? Instead of laying out 2 to 3 years, let's lay out 5, 6 years. So historically, profitable, blip on the radar. We can explain it. Tariffs, they can explain it to us. We renew the line. We know the relationship. Deposits on hand with the bank. If we lay out 10 years, they had a blip on the radar one time. 9 years, greatly profitable. Not fair to not renew that line because of something out of their control. That's where a relationship comes into play, knowing your customer, being ingrained in their business, being able to go back to underwriters and fully explaining what happened. We had no trouble renewing the line. So I hope that somewhat answers your question. Thank you.
No, it's a great point. All banks have what they call a special asset group, SAG or SAD, I call it, because,
Division.
we're the workout group. But that's really great to hear Matt say what he said, is they probably didn't even do that, right? To say, no, let's keep this in Matt's control as the commercial banker, and let's go ahead and ride out this wave, knowing that this truly was a remarkable time. And so it's a great question in terms of how banks are handling it, because there's also a lot of forbearance that's gone on as well in the real estate market. A lot of businesses were able to hold off on their mortgage payments. The SBA certainly did forbearance on payments, so that was really critical to allow people to ride out this blip, as Matt calls it, because to a large degree, many businesses are back better than ever. Some still struggle. It really has been one of the most random things I've ever seen in my life as a banker. Truly random. I mean, some businesses we did exponentially better during the crisis, whereas others were completely shut. I mean, it was not something that was easy for any bank to handle. And you think about too, for the banks, to underwrite any credit takes exponentially longer right now than it used to. Like the decisioning for small business loans or even consumer loans used to be all algorithm driven. Well, think about it. That algorithm got thrown out the window. Mm-hmm. All of a sudden, somebody is on unemployment after they've been employed for many years. You couldn't trust necessarily how the models were working anymore. All the models had to be checked and second guessed. And mortgage underwriting, if you've read, mortgage underwriting has become even that much more challenging because they have to underwrite every deal individually. And so the ripple effects of this are going to be quite long. But Marius, for you, again, because you're collateral, you're sitting here saying, I can handle that.
That's exactly right, Ed. Again, we're trying to be more proactive than reactive. We're looking ahead versus what happened in the past. When we're looking in the past, is like, okay, what caused that, right? And we're looking the reaction of those businesses, right? I mean, nobody expected COVID. It happened 100 years ago in 1920, a different type of virus. But in the recent years, nothing like this ever happened. Nobody knew how to react, including the banks, including the businesses. So the way we're approaching this is like, what is the plan? How were you able to pivot? What did you do to change? Because it's been, like Matt said, it's been over a year since this happened. If you don't have a plan to move forward, chances are you might not have the chance to move forward with this business. So we're basing ourselves on, what is the plan for the future? If you don't have projections, we'll help you get them done. Like Joseph said, and do a pro forma. And that's what we're looking for. Like, again, we're going back to the collateral, right? Who are your existing clients? Do you have any in the pipe that are coming? Purchase orders. So we're analyzing what's ahead versus what happened in the past.
This also brings up the point about the collaboration I said earlier, where, these three gentlemen are not necessarily competing with one another. So during a really shock to the system like this, it could be even a time where you think about that collaboration opportunity. So Joseph, on this topic.
Yeah, I mean, a good opportunity too to point back again to what you do, Ed, with this special the Small Business Development Center, the SBDC. And Linda, probably to what you do, and I know there's others, Pete, that do this too. But the business owner needs to be able to tell the story, right? They need to be able to demonstrate what aberration it is that they've experienced and how they're going to overcome it. If it's just, well, we hope COVID goes away and we go back to normal, you're going to probably encounter a little bit more resistance. If there's something more substantive there, if you need help as a business owner, I mean, again, the SBDC service for helping with pro formas, like Marius was just talking about, just making sure that the I's are dotted and T's are crossed. It's just an incredible service. So I just endorse that. But I sort of fall right in the middle of these guys. For North Avenue Capital, it's really just about understanding that business. So I wouldn't say we'll do anything, right, post COVID. If there was a blip in the radar, we're gonna want to understand that. And it might be that, I've talked a little bit about hotels. We've done a couple hotels built ground up and refinance, and as you would imagine, we've sort of backed off of that particular industry, but not all of them. We closed a loan in March of 2020 to a small boutique hotel in rural Idaho. And we did it because we believed that the minute people could get back out, they were going to drive. Like, we're not expecting international travel to rural Idaho. We're not expecting, even broader geographic travel, but in that proximity, we know people are going to need to get out. And these are like outdoor centric type properties and projects. And so we can kind of catch a vision for what that turnaround story will look like on the other side, right? So part of it is just digging in and understanding the context. Context adds clarity, right? So that's going to be key. And if you can't articulate the story, you're going to have a hard time overcoming that tough year. So that'd be my response. But that applies really even for us. We see those kind of ups and downs. Really with many of the clients that we work with. And it's really a function of how do you lean in and understand the owners, the operators, and have confidence that they can go execute, and that some of the strategic shifts maybe in the business model or whatever is happening. Again, we see that with generational transfer, right? You might have mom and dad or grandpa who's passing this thing down, and maybe they've always sort of like just barely cash flowed. But you've got a new generation coming in saying, hey, we're going to buy this machinery equipment. We did this with a lumber operation in Louisiana. We've got some new equipment that's going to increase efficiency of the cuts. But that, all this data that supports where they think they can incrementally put another 5-7% margin into their income statement. And all of a sudden, it's a story that you can start to get support behind.
That's right. Well, thanks for the tee up for the referral for the SBDC. So maybe if I could expand on that. So, again, I mentioned I was a banker based in Cincinnati for many years, and I always kind of knew there was this SBDC around, which are run through state universities across the country, is how the SBA set this up decades ago, which was pretty brilliant. And so I almost feel ashamed that I didn't realize all that the SBDC does until I'm now in this role. And it really is what Joseph was saying is perhaps you have a client. Everybody's wishing you brought your sunglasses now, right? If you've got a client and they're at that place where they're kind of at this confluence of each of the areas we've been talking about here, send them my way. Say, why don't you start first at no cost? We don't charge a dime because we're funded by the SBA, the state of Florida, and UNF and other partners like St. Johns County. Thus, we have an office in their administration building. Is I will work with you, your clients, or you personally, with your plan to really think through all the aspects, because there are things they hadn't thought about that I will just immediately trigger in my mind. And I will position it and we package it in such a way with a template that we use that the banks would say, thank you for this, because it lays out completely all the projections, both monthly and annually, the underlying assumptions. We poke holes in all the assumptions to say, what if, stress test it, make sure it can handle this or that. What happens if COVID resurges, and so on. So we provide that at no cost. And then in turn, through the SBRM, the Small Business Resource Network, which some of you belong to, Pete, and others, I will tell you, the SBDC goes to that first to refer clients on. If they say, I need help with a CPA, I need help with an attorney, or any other services in financing and so forth, that is a group here in Northeast Florida. So you might look into that if you're not aware. I wasn't aware of it either until I started. And so it really is a tremendous service. And we'll also help startups. If somebody right now, it's really interesting through the SBDC Florida, they increased their goals in 2021. They really do try to make sure that we as the consultants are really maneuvering in terms of what the state really needs. One is always expansion of existing businesses, certainly recruiting businesses in, but startups. And there's an amazing flood. My calendar is filling up from people that, like me, perhaps, we're in a corporate world. They're tired of it. They got worn out during COVID for all the stresses it brought. they're working from home, or they moved to Florida because, you know, all the whole news we hear about people relocating because they don't need to work where they were working before. And they decide, I want to go off on my own. You know, they have a desire to, they've always had a dream to do something and they have no idea how to do it. And so we'll help them. We'll help them put the story together. And I'll be honest with you, I've had a couple circumstances where I've had a few people, after I put them through the ringer, they decided now's not the time.
Mhm.
I didn't realize I have to personally guarantee. I didn't realize I might have to put up my house. I'm not ready to do that yet, but I might be back in a year or two, right? So it's not just, I get to be absolutely the truth talker, right? Because I'm not sitting in the bank's shoes. I'm sitting here as a third party. I got no skin in the game. I'm going to give you my best advice, and that's what we do. Any other questions to this point? So we got a helicopter flyover for us.
It's going slow too. It's nice.
And we're good? All right. So how about this? Maybe some final thoughts from each of the gentlemen, and we'll wrap it up, if we can.
1 second.
All right, let's go with Matt. We'll come on through, and then we'll wrap things up.
Sure. I'll just say thank you again for everybody for coming. And, you know, I did not know Ed, Marius, or Joseph before being involved in the chamber. And it kind of shows the power of being involved in the chamber because, you know, I run a deal by Marius, and, you know, Marius and I discovered we both have a love of Lebanese buffets. You know, it's great. I had a deal the other day that somebody wanted to open up a business in Mexico Beach, Florida on the Panhandle. It just wasn't anything that we could do, and ran the deal by Joseph. And it wasn't anything Joseph could do either, but he gave me another resource in his network that may be able to help the client out. So, you know, life just gets easier the more friends you have. So thanks again for coming. I hope this was value added, and, you know, think about being involved in the chamber. Thank you.
Well, two things matter in life: health and who you know. And it can be more true. Well, thanks everyone for coming and listening to us. I was extremely excited to join the chamber. And one of the things that I asked for is that, look, I'm not looking to get anything. I'm just trying to let the world know what this is and how it works. And I got to meet people like Matt and Joseph through it, and Ed. And that's exactly what my approach is for local market is. I want to be in front of as many bankers, CPAs, all the professionals of the world, and just find synergies. You know, this is what we do. We're doing something very particular, very niche, and it fits within the banks. As we can become a vehicle where, you know, as was mentioned previously, if they cannot serve their need when it comes to working capital, we would love to pick them up and bring them through our training school 2-3 years. And once he graduate, put him back in the bank, you know, as that's when he's really going to make the most of it. And, you know, I'm just thankful for the opportunities to partner with people like this that, you know, is going to allow us to bring ABL to the market. And our goal is really to be the premier alternative source of working capital for the local businesses, especially. And for that reason, in ABL world, it's a very intensive process when you underwrite. $500,000 or 5 or 10, you almost do the same work. But for the local market, because we found there's a need even below that, we lowered our threshold to $100,000 line of credit. In ABL world is unheard of. But that's all to really help my community first, and the rest will come. So thanks again for everyone. And if you have any questions, I'll stick around for a while.
Yeah, I'll just reiterate the appreciation. I mean, obviously it's a beautiful venue, so thank you for that. And really just the endorsement for the chamber. You know, Karen Everett, who used to be in the economic development seat that Kathy now fills, she's now with the Ponte Vedra division, but she's the first that introduced us to Gus. And so there is meaningful, you know, relationship value that derives around here. And I'm thinking of, you know, when we first came here, and, you know, five and a half or so years ago, we didn't know anybody. And so the chamber's been really important for us just to get to know people locally, and led to a deal, some relationships that we knew. A deal over in Clay County as well, similar to what you were just describing. Business owner, CFO, retired, started a wedding venue. So, great operation. Very grateful to be a part of it. And the thing I would just close with saying is that this isn't a competitive environment. I mean, it's a competitive environment, right? But there are so many businesses, particularly right here and then beyond, but that are at every different level, and it's really a pretty cool opportunity to be in relationship with men and women who you don't feel threatened. To send somebody to Mars, to send somebody to Matt, it's we know that we've got each other's best at heart, right? That we're here to help. Certainly we need to make money. That's how we put food on our own tables too, right? But we're here to work together in that regard. And I'm grateful that the chamber helps to facilitate that. And I hope you guys, I mean, for real, if you're looking at growing your business, starting your business, look at the SBDC. There's offices outside of Florida too. So if all over the country, and it's a great service. Your tax dollars at work, so go use them, right?
And I'm going to have Kathy come on up and wrap things up. But I do on a program note, which she might mention, but I want to mention it too, because on May 20th, as chair of the Small Business Council, I'm teaming up with Matt for the Ponte Vedra and Karen and Kathy. We're hosting an event here around the power of surrounding yourself with a banker, a CPA, and an attorney. And that'll be our panel. And we're still the location TBD. Maybe to be at a pool nearby, I'm kind of wondering. Could be, I don't know. It needs to be outside perhaps. But if there's one thing I saw, and Matt would definitely attest to this, and many of you, that organizations that did not get the PPP loan or struggle with it was because they did not have a strong relationship with their attorney, their CPA, and their banker. So that'll be our program for small business in Ponte Vedra on May 20th. Kathy. Take that one off your list.
Thank you, everyone, for coming and for braving the weather. We appreciate that you're here in person. Right now, as you might know, we are doing all of our in-person events outdoors, and we'll see how that moves forward as we continue going forward through this transition back into normal. But I wanted to, again, just thank everyone for coming. I want to thank Peter and the team at TPC Sawgrass Clubhouse. It's a beautiful venue. We're so grateful to be here. Thank you to Sight and Sound for making the sound work so that despite the overhead flyovers and the lawnmowers and the leaf blowers and the sprinklers, you could all hear each other, and that's wonderful. Thank our sponsors, of course, our panelists. Thank you so much for being here, for working through this for the last several months with me to make it work. And then Regions Bank for being a sponsor, Joseph and North Avenue Capital for sponsoring, Allison and Precision Payment Solutions for being a sponsor, Haley and Florida Healthcare Plans for sponsoring, and of course, Fields Auto Group, who sponsors this series, as Karen mentioned. The next one will be a luncheon instead of a breakfast. But again, thanks for having coffee with us this morning. You can check our website and you'll find all of our events are online on our calendar there. We do have a few other, councils and things happening, some virtual, some in person, but we're transitioning back to whatever the new normal is going to look like. And that's all I have to say. Thank you.